Thank you for coming. My name is Darren, as you probably saw on the promotional flyer, and I do actual US and Singapore, in this case, tax returns. And
hi, I'm Tim. I'm a US tax attorney, advise on US tax.
What should I do from a tax perspective when I'm preparing to expatriate? I give up your US passport.
I can take that one. So there's three rules for expatriation. The first rule is that you have to be under 2 mil net worth. The second rule is your rolling 5-year or 3-year, I forgot, but your tax liability that you pay to the US government has to be under, I can never remember the figure because it's indexed to inflation, but I think this year is 180 or something. And then the third thing is you have to certify under the penalties of perjury that you have been tax compliant for the last 5 years. So those are the three key requirements. There are exceptions to some of these rules. For example, if you were a dual resident at birth, or if you gave up your US citizenship when you turned 18. So those are things we can look at, but those are the general rules. Because if you violate any of those rules, you become a covered expat. And as a covered expat, you're subject to the exit tax. And that's all due to Eduardo
Saverin.
Yeah, the Facebook founder who's here. Because before that, we didn't have this rule. And then right after he expatriated, Congress was like, we can't let this happen anymore. And then they issued this rule. You'll have an exit tax, meaning everything you hold, if there's appreciated gains, you'll pay a tax on it. There's, I think, a 600K exemption, but after that, you pay capital gains tax or whatever tax you have on that. And then you'll be labeled a covered expat, which means that any gift you give to a US person is subject to a 40% tax. So that US person has to pay a 40% tax for whatever you give them. So it's really harsh on when parents expatriate, but the kids are still US citizens. So it really makes gifting money to them really hard.
And these issues are quite commonly encountered as not just US citizens who giving it up to presumably become Singaporean, for example, but even Singaporeans who do a stint in the US and come back with a green card and they've held on to the green card for a period of time. Then when they seek to surrender that green card, they're subject to the same criteria as well. And this also goes back to one of the points that Tim raised about the rolling 5-year look back, because you're certifying the penalty of perjury that everything is correct for the past 5 years. If it is that you were internationally exposed, but again, you're using a US domestic preparer, when we review those last 5 years, I guarantee we will find issues. Guaranteed. We've never looked at returns, i.e. returns that weren't done by a dedicated international team, and not found issues. So it's always, advisable just to have someone take a look at it. And if it is that you are a covered expat by virtue of having a net assets in excess of 2 million, which is a tiny condo in Singapore, which means everybody is, kind of, then there are some potential tax planning opportunities. Comment on that?
Yeah, so a pretty easy one that a lot of people do is gifting it away. Gift to their spouse, gift to a trust, and making sure it's a complete gift, not like a wink-wink gift where you gift it to them, but let me expatriate and you give it all back, right? So it's a pure gift to get under it. They can also gift to their kids too, right? And then let them have it, because if they're planning on already giving them their estate, then this could be part of the planning.